What's up, everyone? Welcome back to the channel. I think today is going to be a very, very informative stream because we've got two of the heavy hitters from the Mars High Club Discord. Obviously, Paradise, as you know, who is a gun on the charts, and also Morin, who you might not know, who's recently hit some very, very good Bitcoin short trades, actually, that we're going to go over. We're going to get everyone's outlook today, so I'm going to give my opinions on where the market sits. I won't repeat too much from yesterday's show, but I will recap the major variables that are impacting the market at the moment. But more importantly, we're going to run through the charts with Paradise, with Morin, get their individual outlooks on where Bitcoin's sitting. So are we potentially heading into a bear market, or is this simply a bull market retest? And we're also going to, I'm sure, talk over altcoins and what our strategy is. Are we risk on? Are we risk off? What are we trading? And all that stuff. So I think the best way to do it is I'll kind of start with this tweet, and then I'll get into Paradise's outlook. But I just wanted to highlight this as like tweet of the day from Jordy here, because he basically summed up crypto's current poor performance like this. Today's poor price action in crypto is, in our opinion, so referencing Salini, the result of the market being tired from the repeating, failing attempts to break higher and follow traditional assets. We're in a hangover phase from both the DAT buying, which has ground to a halt, as well as the recent liquidation shock of November 10th. The market will have to first convincingly show that a convincing bottom in price is near before making a fresh attempt at breaking upwards. So let's see if some value buyers emerge at this level. It seems like a good spot for slow money. And I would agree with this. Like, this is what I pointed out yesterday in the big post that I summarized on the video from yesterday. So if you want to know more about fundamental market dynamics, go and watch that video. But I basically talked about the fact that ETF flows have ticked negative. The DAT narrative is exhausted. So some small to mid-sized DATs have been unwinding. But in general, the buying has slowed down. And altcoin underperformance combined with equity overperformance has led to, I think, capitulation across the board, which has now become very evident in the charts, across Bitcoin and altcoins. But now you know what's happening and the likely reasons why they're happening. I wanted to pivot today's video into something a lot more practical and actually go over the technicals with two traders that I greatly respect and have had a great track record in the Mars High Club to unpack things a bit further here. So Paradise, over to you. What are you seeing on the Bitcoin chart right now?
Cool. Thank you. So yeah, I'm just going to start on the weekly. So basically at the moment, I mean, the vibe has been terrible across the timeline in groups, whatever. We're just seeing, basically emotional capitulation from everybody. But we always see that happen pretty much at these points where we have these, peak despair sort of wicks into high time frame levels. So two levels I'm watching at the moment. We have the 365-day rolling VWAP. We can see here, since we flipped it back in 2023, it's just like the weekly noodle, which I'll get into a sec. But every retest we've had of it has pretty much marked the bottom for a major swing higher. So now getting a retest of that here. I've been waiting for this level between 198K, and we're finally getting that, right? So sort of we can see the same thing on the money noodle on the weekly. I'll actually just get rid of the rolling VWAP for a sec. Once again, we've been over this many times, you and I, Mars. We always discuss it on stream, but every retest we've had of this thing, we've never actually closed the body below it. Yes, we've had wicks in there. Yes, we've chopped through it. But eventually we come good. Now, it's not to say we just hit this thing in reverse. That's not sort of my thesis with this. We can see, between the noodle and the VWAP, if I just pull that back up, we've had wicks into it, but it's not just been a V reversal back out. We have an extended period of chop each time in there. So I do think we potentially form a bottom around here. On the high time frame, I just think maybe that can take a while to come to fruition. Now, so we can also see, like in the past, we've had these big SFPs that have led into those levels. So I'll just use the VWAP for now instead of the noodle. It's basically the same across both. So no run of the highs over here. We actually had all these stacked highs, and Trump got into office that pumped us through into the next leg up. But you can see we had this nice sweep down here in the weekly into the weekly VWAP before recovering. Up here, we had an SFP of the highs before coming down. I think it was like a 30% move into the weekly VWAP. Once again, we've had a sweep of the highs down here, and we've done like a 22% move so far. But we have to sweep this low here. So, ideally, it would be cool to see maybe some sort of consolidation here and chop, and this low remains intact. But I actually think we probably run this 98K low over here, which we've been discussing a lot. So maybe, right now we have this sort of potential lower time frame bottom form. We have a bit of chop. But I do think eventually maybe push up into like 106, even up to 108.5K, and I'll discuss what it is in a sec before rejecting back down. We're also in this weekly breaker right now. So this weekly breaker held back in June of this year. and we had a nice push up and an all-time high from there, and we're now retesting that level again. So we have a lot of confidence on major levels here for a push up. If I actually go to the yearly VWAP as well, so we have the 365-day rolling there. We can also see we are coming into the developing yearly VWAP. So we have the confluence here between 100K and 98K. So I just think there's a lot of lines in the sand here for a potential bottom and a push up. We just sort of need to endure the chop while that happens.
I don't think it's going to be a quick recovery just based on the fact, like right now, I think this bottoming process, as you said, will take some time to develop based on the fact that 100K didn't really get front run very strongly. Like what we're seeing across the board on Bitcoin and alts is like a slow bleed into a support level. And typically, if you get a slow bleed into a support level instead of like a quick wick down, it takes a little bit longer to resolve. Longer could be like a few weeks, a month, but like that bottoming process, I don't think will be as quick as, let's say, like April 6th tariff thing, where it was just like a wick down and then, a very strong bounce, because we're just not seeing that demand, which is a sign that something is like a little bit structurally broken in the market right now. And it goes back to what Jordy said about how it's a good spot for slow money. So fast money isn't going to like this because you probably won't get like very quick mean reversion, but slow money might find value in this zone, if you're positioning for like a multi-month period.
Yeah, so basically, like if we start to lose this level, so I know I've talked about a bounce here, where we can look for that bounce to get up to, but if we actually start to lose these two levels, these have been kind of my cycle levels in the sand. Since the weekly VWAP and the weekly noodle have held since 2023 in every retest, I'm kind of using that as my barometer. If we start to close weekly candles below them, I think we're in for an extended period of ranging on the high time frame, or even pretty much a cycle top when we look for a bleed down to maybe 74K or something, just because we have institutions interested now. So I don't think the sell-off in BTC will be as bad in the bear market, but we'll have to see about that. But if we do start to lose these two levels, I'm just looking for rotation down to like 88K, give or take, which is the bottom of the developing yearly VWAP. I've actually flicked to this one. It's just a chart I shared on Twitter the other day, which is admittedly a bit of engagement bait, but it's fairly succinct so far. This is just the previous range high and low. I am classing, if we do close a weekly candle on this could potentially be a big deviation, and we look for the rotation down. So that 88K level actually matches up with this weekly FVG down here. So maybe we come down and give some sort of retest into the range EQ. Maybe that comes into the FEG, that 88K level, which fills the value area low from the yearly VWAP before a bounce up. If we fail there, I'm looking for the rotation pretty much down to the other side, which is roughly 74K, give or take. You can also see the importance of this range high right here. We've had 7 weeks trying to close below it. Admittedly, this candle looks quite bad, but there's still quite a bit of time to the weekly closes. So maybe we could actually get an aggressive buy up if we can flip that 108.5K level. That would be another weekly close above here with rating all the liquidity down here. So I actually think that's sort of the best bull case scenario I can think. I would like that 98K low swept, but if it doesn't, we get back above 108.5. I think the acceptance above that, we've run low enough to start pushing up into higher prices and even have the notion of targeting all-time high again. So I'll have to see about that. But yeah, in terms of local
how do you
price
stop
action,
yourself? How do you stop yourself going back from catching a knife? Considering we have support at 98-ish zone, but then the next major support, as you're showing on the weekly here, is 88. So do you have to be very quick with invals? Because I think a lot of people watching this are going to be like, okay, I might look at adding to alts to play major alts to play the beta versus Bitcoin, but clearly they'll get smashed if Bitcoin goes to 88. So
yeah.
Are you going to be running your Bitcoin trades with super tight inval? Are you trying to catch a knife? Are you waiting for strength before adding? How do you approach this?
I'm not much of a knife catcher. That's more Morin's bag. I'm more of a sort of, once the trend is reclaimed, I hop in line with the trend and let people take the cuts, death by 1,000 cuts, and then I get in when the trend's established. I don't catch the bottom, but the nature of trend trading is you never catch the bottom or the top. You kind of try to catch the 70% meet in the middle. So for me right now, yes, we do
want
have
to see confirmation. You'd rather pay 10% premium or 15% premium for confirmation than try and tag the 98K low on the head or an 88K low on the head.
Well, I am long now, so but yeah, admittedly, yeah, that's pretty much it. I just think mental capital is more important than financial capital half the time. You can keep trying to catch that knife, keep chopping yourself out, maybe take a few cuts to the portfolio. But I think actually if you keep trying to catch that knife, keep getting stopped out, you're doing more damage to your psychology there. And then eventually when the actual trade comes, you don't take it because you've taken so many stops, you're starting to doubt your own ability. So I'm sort of just waiting for, confirmation on things. Admittedly, I'm in an intraday long right now, which we can cover in a sec. But, first port of call right here, if we start to get above this 103.5K level, that's a reclaim of the structure low. That's quite good. Then we do have a lot of overhead resistance to fight with. We have this H4 supply up here, this point of breakdown. We have the 3-week composite value area low, which is at roughly 107.5 to get above. And then we have the previous month's value area low from VWAP at 108.5. Now, 108.5 is also the range high from this macro range I was talking about. So there is a lot of sort of friction to get above. If we just look at
Would
this,
you short that bounce?
Yeah, 100%. I'm going to short 108.5. We start to show any weakness there. I think Morin and I are fairly aligned on that. We've been discussing it. Right now, the trade I took earlier, if I just go to the 15-minute, I'll wrap up in a sec so Morin can talk. But I was simply just looking for, I have to pull up the noodle here. Just looking for this M15 flip of the noodle in line with this like little SR level. So basically, you can just see a nice support resistance level there. We basically flipped above that. We did leave these equal lows down here, which I hate. I think there's such a good liquidity pocket. We just have the 98K true swing low under that. So any sort of move down weakness in this, I'll be cutting the trade. But for now, we are holding the M15 noodle. We're holding that support resistance flip on the M15. You can see the M15 on the way down has been respected historically. So every retest has been bearish. Everything's been a short opportunity. I wasn't trying to short, after 111K where I missed that short, which I'll discuss in a sec, just because we're so close to a bottom. I think Morin closed his short out fairly close down here as well, just for that reason. We're probably due for a bounce. But my lines in the sand so far, with looking at BTC, if I just go to the weekly here on VWAP, my reasoning for taking that trade was based on a 30-minute divergence. But, in here, we also have a supply cluster at 104.5, give or take. We also have the developing weekly VWAP there. So that'll be my first port of call for take profit on this long. Now, if we start to flip above that, I'm looking at the 7-day rolling VWAP, which is also the developing value area high for the weekly as well, which is 106.7. So I think major resistance is going to come between 106.5 to 108.5. We can see here like 108.5 is also roughly previous week's value area low. So like I said, there's a lot of friction above. We just need to sort of play at level to level right now. And I just think I'm not taking swing longs here, but in terms of confirmation, I'm just taking, like, the trade I took was a half risk trade just because of where we are with these equal lows. I don't feel comfortable risking a full position size. And also just think it was such a sharp bounce there. I don't think we just V-reverse out. Now, if we do, that 108.5 is my line in the sand to take a short targeting 98K lows. And possibly a bit lower, we'll have to see. But the lines are fairly clear at the moment. I think the levels are pretty clean, and we're just playing level to level. Well, I am anyway.
Yeah, and if you guys want updates on Paradise's stuff, if you're not already subscribe to the YouTube channel. We'll leave a link in the description below. He's doing regular updates over there. Of course, all the trades are shared live in the Discord as well. So, no, that was great analysis. Helpful. We'll circle back to you soon, but I want to hear from Morin now, because Morin, I think you've traded this move better than a lot of us. So I'd love you, well, firstly, introduce yourself to the YouTube audience who might not be familiar with your stuff from the Discord, but then also unpack your recent trades for us.
Yep, sounds good. So I am mainly a sort of positional trader. So I don't day trade. I usually hold these sort of swing trades within the week, and order flow is a very big part of my own system, and I also mainly trade ranges. While Paradise is well known for his trend and his noodle, I am a terrible trend trader, but I am very good when it comes to range trading. So, for example, we had this range prior from 125s to 98s with the swing low. And as price trades into these swing highs, my mentality is always to look to fade it, because a lot of people get bullish into the highs thinking we keep going higher. But for me, these offer some of my best trade setups. All right. So I made a post in the Discord on the 8th of October, which was right after we deviated, that I'm going risk off on any longs. I didn't like the rejection, and I felt more comfortable just waiting to see what happens next. All right. Now, this was also a short that I took with everyone in the Discord, short from 122.9s. Now, the reason I took this short came down to if we have a look a bit closer, as price was pushing up into the range high, which we have just here at around 124.5s, we had this 3 drives pattern, right? And 3 drives are something that I've only seen unfold on higher time frame, maybe 3 times before, and that I've traded. So they don't happen very often, but they offer like a very high probability setup, right? And when you pair this with order flow, for example, with the delta, we can see this template here, which is on Agar. These blue bars represent aggressive market buying being absorbed by passive limit sellers. All right, so you could say your whales or your larger entities who are moving the market. So when I see these large spikes and the momentum dissipate as price pushes into the high, that for me is a sign that we have a lot of aggressive buyers who are trapped. And when you have these buyers who are trapped at the highs, when price trades back below, you then get this unwind. So that for me was how I executed that short that I did close out around 108s. This was just the one P&L. And next is something that I learned through some of my mentors is when we have these big liquidations, you have a lot of people who are going to be chasing the knife. So Paradise said I like to chase the knife. Usually I really don't, because I like to fade it. And what I mean by that is when you have these big liquidations, what you often see is a bounce, right? People who are chasing, FOMOing. But these big liquidation events and these big wicks, they take time to unfold. So what you can expect is a rotational environment. So my mentality is I'm looking to short, right? If price bounces into a key level. So this was one of the second trades that I took, and actually one of the most recent ones. It was my entry was on 115.48, and I closed it out half of it at around 108s and the other half at 103s. Now, again, when I took this trade, you could say it's sort of a range within a range, right? Such as this at the time. As price was pushing up, we're coming into a key high. Again, I'm not looking to long when we're coming into these highs. I'm not thinking breakout. I'm thinking I want to fade it. I want to take the opposite side of the trade. So if we have a look at the delta, what do we see as price trades into these highs here? We have a spike in delta and we have another spike on the rounded retest. And this is where I refine my own trade execution is by looking at the order flow. So on the first push to 116s, we have 1.2 billion, 1.2 billion volume and 150 million delta, as well as a cluster, like a high volume node forming. As price starts to trade down, we see a lot of red at the bottom of the candles, but price isn't pushing lower, which tells me shorts are getting aggressive, but they're being absorbed, which means that there likely is a high chance of price coming back up to revisit these highs. Now, do I know we're going to reverse from here? Do I know we're going to go to 116s? Never, right? It's impossible to know beforehand. So I just have to play it from one to the next. So as price pushed up, we have spike in volume, spike in delta. As soon as we start to reject from that high volume node, that was my trigger to take the short and write it down. So those to me was some of the 2 setups that I played in the Discord. Now, when I'm looking at current price action, my rules are very simple. When price sweeps a range high, I do not look for any high probability longs until we trade into range lows. Now, we are currently trading close to the range lows, but my setup was I wanted to see price take out this low at 98K and then trade into this zone. Now, this zone, you probably see something like this being posted around. And it's a very big sort of 5K demand zone. Now, for me, I can't trade off of those zones. I have to be more precise. I have to refine them. And one way that I do this is by looking at the actual consolidations within the larger zone. So we have this demand zone, this consolidation that led to an impulse, and we have another one just below. These are also confluent with some single prints and naked point of controls, which is something that I cover on TPO charts more in depth in the Discord. But something you can do is take a fixed range volume profile. And as you can see, we have the value area high, POC, and value area low. So I know based off of this that even if I'm looking to take a short, if price tags 98s and reclaims, I know that there is also a setup for me if we get a deeper push into 95s, because you can never know how far BTC goes, and usually it'll go further than you expect. So for me, the long setup is going to be price taking out these equal lows. You know, I spoke to Paradise about this, and I don't like them myself. And what I would like to see is if we do consolidate, build up positions. So all these people who are currently long, you know, they continue to chase. If we do revisit that level, the most important thing will be how do we react from here? Do these longs positions get shaken out, close out their longs, become sell orders, then you have a passive buyer absorbing them, followed by a reclaim of the prior swing low and the range low. That to me is a trade that I would take into my first trouble area, which will be around 106s. So this was the consolidation to this sell-off. But the main target I would look for is if I head over to the 12-hour chart, will be this sort of consolidation here, confluent with the monthly open. This would be where I look to take a short. So the long scenario is a push into 98s followed by a reclaim, or if we get a push up into 108s. Personally, I have no edge trading in the middle, so I like to just stick to the extremes.
And to be honest, Bitcoin's been in a range for a long time. Like I think over 100 days. So if you've just been trading the extremes on Bitcoin, and of course you can apply this logic to alts if there's confluence with, you know, altcoins and Bitcoin, then, you know, there's been lots of opportunity if you're a range trader. So I think this environment suited your strategy, because everything in the middle has just been like noise essentially. Like everyone's just gotten chopped up, just while Bitcoin's basically just been ranging. Like this is all it is, right?
Yeah, and one of the things I tell the members is, you know, they'll ask me charts about altcoins or levels to bid, and what I tell them is like, look, put your focus on Bitcoin, right? Mark out your high time frame ranges, and if you're going to be looking to buy, you know, or long Bitcoin into these key high time frame range lows, which are like, if we lose these levels, then you have to be much more careful. So if you just identify these range lows, then that's when you can look to start bidding alts as well, because then you're not sitting through that chop, which is where people lose the most. Instead, you're waiting for those big liquidations on Bitcoin at the key levels, and then you can start nibbling away at some altcoins.
I just did a tweet yesterday saying, if you're flipping bearish now, just know that you're turning bearish into major support. And I think this is kind of exemplified on your chart that everyone is super bullish towards the highs. Like there was so much euphoria, you know, all the retests of 122, 123, but now everyone is extremely bearish. This is the worst I've seen sentiment at the range low. So I know you can't use sentiment itself as an entry trigger, but that in confluence with the potential setup here would lead me to believe that there is a chance that we form a bottom. Not exactly at this level. I think, as you said, we need to sweep down a bit further, but I just find it funny how the market just never fails to repeat the same behavior. Bearish at the lows, bullish at the highs consistently. So if you were bullish a week ago, but you've just turned bearish now, you have to ask yourself, like, am I literally turning bearish near a support level?
100%. And I think it's funny what you said about sentiment, because the delta for me actually is a sentiment indicator, because it's telling me all the people who are getting aggressive, and even look down here, all the people who are getting aggressively selling. You know, I've never seen such large amounts, and especially a cluster, right? Like these clusters for me are very powerful, but it's still the context. So I see this cluster, I know we have a lot of people getting this aggressive selling, and I'm like, look, the time to sell was the range highs. The time to sell was 116s on the first bounce. The time to sell was around 113s when we had that SFP. We traded that in the Discord. The other time to sell was when we had the swing fail at 116s. I'm like, why would you want to sell down here? The risk reward is gone for me, right? You need to flip. So when I see all that absorption, I'm like, okay, we have lots of aggressive selling being absorbed, but we haven't tagged my level yet. And you just got to be patient with that. And most importantly, I can get rid of this whole chart and I could just show you this and just highlight a few regions. Key demand zone here. We had this demand zone confluent with the previous high, and we have this level here. Okay. The most important thing to note is that I do believe that we are not going to be reversed. Okay. What I anticipate, and of course I could be wrong, right? We never know. But based off of previous ranges, previous structure, and from what I've witnessed, bottoms take time. For example, here we had, you could say a triple tap, you could say a 3 drives pattern to the downside, right? With multiple great trades to take both sides. And then within here, we had a triple tap, right? Lots of trades to take. And these bottoms took time before we had another push up, even just back to the range highs. So when I see this price action, I'm like, look, there's no need to FOMO, even if I'm looking to catch the long, because these bottoms will take time. We could bounce from here, come back down, have another sweep of that low, and maybe, it could take a month, could take a couple weeks, as you said. But, these bottom structures take time to develop, is the main point I wanted to say.
Yeah, and if everyone has been, I think one good thing about your channel, even if you are in the Discord and you haven't paid attention to it, I highly recommend paying attention because you've kept people updated like the whole way through, like it's all here. So all of these moves, as you can see, like lots of posts, like you've done an amazing job. You've covered people through all of these short setups, and obviously you have your weekly stream as well. So it's all here. I'll leave a link in the description to MHC as usual if you want to check it out if you're not in. But I think this has been great for people as like a North Star in a tricky market. And I mean, there's something for everyone as well. Like obviously Paradise's style is a lot more low time frame, more trend based. So that's great for people that want more action or want more trade setups and options. My stuff's more fundamental, and the way you trade, because some people might see your Bitcoin trade and be like, oh, only a few 100%. Like I always hit a few 100% trades, but I think the difference is like you genuinely, and you can actually look if you go into the Discord and look at your history, you don't take that many setups. So, you're the type of trader that will take a few high conviction setups a month, even if it's just one, as opposed to like 20, 30, 40 setups. So I think that's like the big difference here when it comes to strategy.
Because P&L percentage cards don't mean anything realistically, right? The only thing that matters is your position size. I like to take less setups, but higher probability setups, which come less frequently. And the whole point is, these setups that don't happen often, but are high probability, I could size up substantially. All right. And, a percentage P&L card will never tell you, how much size that person is really putting on relative to their account or to their portfolio. So it is just like a common misconception. But 100%, I like to focus on those A-star setups, and I'm very into journaling. I'm very systematic. I have 5 trade sheets that I fill in before I take a trade. I review my trades every week, at the end of every day, every month, and I share all those reviews as well in the Discord. But it's like I'm very, very process orientated.
Yeah, I saw this post you did, like your this was at the beginning of November, your monthly performance review spreadsheet that you put in for people. I think that's great. And then you had your monthly October review, biggest loser, biggest winner, average profit per trade. So I think the transparency is great for people, but I think the even better part about it is the mindset of like how to actually become a better trader. And this isn't just relevant for trading. If you're an investor or you have an edge on chain or wherever you get your edge, reflecting on why that was a good trade and why it was, if you lost money, a bad trade, that's going to help you go again and become even better next time. And I guess because, we have AI and stuff now, there's no excuse. You can use your template, put those questions into GPT, and then set a weekly or a monthly reminder on your phone. So there's like really no excuse not to do it.
Yeah,
there are no excuses. If I make a trade and I make a mistake, it's like, all right, what was the mistake I made? Why did I make it? And then what can I change in my process to mitigate that mistake again. You can put that into ChatGPT, like, hey, this is a common mistake I'm making. What's something I could do, based off of these other traders, these other books? What other advice do you have? There's so much out there that, for me, any mistake I make is an opportunity to get better, right? That's the way you got to see it. I still make many mistakes. I don't shy away from that, but it's how do you bounce back? What do you take away from it? And can you avoid making those mistakes again?
Yeah,
definitely.
Smart. It's good for the server too, because like when conditions are really hot, people just focus on the trades, focus on the results. But Morin's getting a lot more coverage in the group lately, and a lot more people tagging him, asking questions, because they're now realizing it's more about the process, more about refining the process to be able to milk the conditions when they're good. So I've seen a massive uptick in just people following Morin's system now, as opposed to mine, which has been really good because they need that guidance and that systematic approach in order to capitalize.
And you can have a dual system. Like you can learn trend trading and like swing trading or range trading. So you can have a strategy where you have like a smaller portfolio, because people still want to stay sharp, right? So you can have a smaller portfolio where you take these lower time frame trades just to like have a bit more action, but obviously with much lesser size. So you can get that quick feedback loop of like, oh, this is what went wrong, and this is what was good, and this is what was bad about my trade, and then reserve your like bigger capital. So that way you compound results quicker, and then reserve your bigger capital for, maybe like a higher time frame system like Morin. And I think you kind of do that anyway, Paradise, like in terms of position sizing. But for the average person that isn't an experienced trader, what you need to learn is like, what's the time to go big on a trade and when to go like smaller. Like, for example, you're not sizing like a small mean reversion on an altcoin right now the same as you would like a 98K Bitcoin sweep, where you like, the reaction. Like clearly the Bitcoin one is going to be 10x the size, but that's something you can't show on P&L cards without actually like doxing your accounts. So, but that's something we need to teach people. And I think that's what's good about having both of you in the group as well.
I have a separate sub account for intraday stuff, just for scalps. So effectively, it's a much lower account. I don't touch my main account when conditions are bad, because it just forces bad habits. I have that side account, and I'm risking 0.5 to 1% on trades. If you flick to my screen currently, this is one I posted in the group today on ZK, just looking for a retest of the M15 noodle into this SR flip level. This is a very nice trade. Could have been decent profit. It was still like 0.5% of my account I'm risking on this, just because conditions don't look great for alts. Like we've seen alts getting smoked, and like I was using this in the Mars High Club stream the other day. Just a general barometer I'm seeing for altcoins to get some volume and get a general lift in the market again. Obviously, you're getting your intraday like outlier scam pumps on things that don't really sustain. You can pick those up by using volatility screeners on things like Orion and whatnot, Orion Terminal, if you want to check that out. But for me right now, obviously when ETH pumps, it sort of leads the altcoin rotation. It's just being capped by the daily trend. Now we are coming to this very key pivot level. We are currently trading under it. So sort of SR flip there. Maybe we print this as a deviation. ETH starts to sort of outperform, but really I don't think alts are going to get the lift they want until we get above this like 0.036 level in ETH BTC. We start reclaiming the daily trend. We just look for, as the doodle shows, we look for that to flatten out in the noodle, to get flipped and start trending upwards. That's where I think altcoins become more attractive. Maybe we do get like a small bounce if this reclaims this level. Maybe alts have a bit of their time in the sun as we come back in that daily trend. But I also think flipping that is where I start to go more risk on alts from a swing perspective, just because we're trading in line with the momentum then. So all I've been doing today, I've just taken a starter spot position on BTC at 98K, and then I'll look to build on that if we go a bit lower. But in terms of altcoins,
did you get spot at 98? Where did you buy? Because I think it went 99.6
or something.
Really? Did it go that low? I only saw 99.1, but that was on futures.
99.8.
Different wicks on different exchanges. What are we at here? 98.98. No, it was definitely in the 98s. So I have to check it, but it was on the MACD chart.
I hope you get stopped so I can get my fills.
Yeah, well, look, it's only a starter position. I'm not going heavy in yet. I'm really waiting for what I discussed earlier, which was God, I got too many things open. which was coming down into that yearly developing VWAP. So we start to get that, I'll be more inclined to take the bigger position.
And I think with building altcoin positions, like a lot of people, obviously on the channel will trade alts or hold alts. Like I think what you guys said before is like good advice. And this is what I'm doing right now. Pay attention to the Bitcoin trend, because it's likely that Bitcoin is going to lead the next run for alts anyway. Like you would need Bitcoin to have a significant bounce to trigger that next rotation. So if you're in alts, and Bitcoin's probably going to be the fastest horse out of the gate on the reversal because of the damage 1010 did, then you're probably better off isolating your focus to trading Bitcoin. And then once the Bitcoin setup presents, likely, you'll get the reversion on alts as well. So if that reversion is to like 1085, you'll be able to take alt swing trades during that period anyway, even if it's just spot. So like focus on Bitcoin, nail the setup on Bitcoin, and then just pick a basket of alts that you think will bounce strongest. Now that'll depend on the time, because in, let's say the bottoming setup comes in 2 weeks, like that might be different from the exact coins you long today. Like if I was longing alts today, there'd be a few that I pick, but it might be different then. But start like refining your watch list and just like what's showing relative strength or what has like a solid chart setup. So then when the time comes to open a Bitcoin trade, you can also like play like a basket of altcoins. And ideally they're the ones that have narrative alignment with the market, that have some sort of technical alignment as well, because ideally, you have some sort of risk management on your altcoin position. So that by default might cut out a lot of positions from the market. Like ENA is a good example. Like it's fundamentally good, but I don't think the chart is like very compelling versus Bitcoin. It's just like a bit of a hard one to trade because there's no clear high time frame level. Whereas like SUI, there's a very clear level at the moment, which is like $2. So that, just as an example, like it would be easier to play SUI, I feel like, on the reclaim than it would ENA, because like it's so far below its support. So I think you've kind of got to try and find confluence with the alts that are looking good versus Bitcoin at the time that you take the trade. And those will be the best ones to enter. And of course, I'll just give people options. There's of course the option of, if you aren't a trader and you really don't want to execute and, you just want to like allocate and chill. I don't know if there's anything wrong with like a TWAP for like a few weeks. If you think like the cycle is going to continue and we're going to get a bounce at some point, you could consider just averaging in and chilling. That's fine. I don't hate it as a strategy, actually, because we are close to obviously a low. The only thing is I can't personally bring myself to do it because I just don't really enjoy the feeling of being heavily underwater. And just given where we are in the cycle and how shaky things are, I just don't have the conviction to like, allocate a bunch of size and then like, let fate decide. So personally, I'll be managing it more actively, but it also just depends on how you trade. And some people will be like, yeah, it's a decent zone, I'll just average into strong stuff in Bitcoin because I think there'll be a bounce. I think that's actually fine, but it's just not what I'm doing personally.
I just think value investors haven't had the best run lately. Every time they DCA, it keeps going down, right? So
it's like catching a knife, and I just hate the feeling. Yeah.
This is why I think waiting for structure reclaims is probably the smartest thing to do. Yes, you miss a few percentage, but if your swing target is like new all-time highs, do you really care if you miss a few percent when like the double-digit percentage to the upside or triple-digit on altcoins is what you're really going for? What I'm kind of thinking is maybe Bitcoin has like a dominance-led rally and does pump back up to the 108.5K levels, which we were discussing. And people start FOMOing into alts only for that to be an amazing short on BTC, which we can catch. And then alts get absolutely smoked and those buyers are underwater again. So sort of from the psychology aspect, I have to think like this as well. But
and if you are a bit underwater on spot alts, like that could be like, if we do get that reversion on them, that could be the time to offload. Like I think on a lot, like I'm still selling some stuff that I'm not that bullish on and consolidating into things I'm more bullish on. I think you can do that at any point in time. But if there is a reversion like this and you get that Bitcoin short signal, that will be the period where you probably want to de-risk alts even further. Probably not right now at a major support on many, although there are select ones that I am doing it for, just to try and trim up my portfolio a little bit. Most of the invals would have happened. I actually did a post on this a few days ago, 5 days ago, which hopefully protected some people against the last 20 to 30% move on alts, where I said, there were just so many alts breaking down from their key levels that I was forced to cut Eigen, MNT, some Link, some ENA, like all these majors. Hopefully that protected you. But if you missed this, then I think now maybe you've missed the window for a big inval. It's probably better to wait for like a significant push upwards and then look at risking off a little bit more. Unless conversely Bitcoin like starts breaking down, then we'll just need to reassess. But that's not where we're at as of the 5th of November.
Yeah, I definitely wouldn't be selling into a bottom here either. But yeah,
like again, these bottoms are going to take time. So even if we get a push up, why rush? You know, like if we do get some sort of squeeze up, right? Like a squeeze up without taking out these equal lows to me makes it even a better conviction setup. So it's like you start chasing alts, price pushes up. Yeah, you get your little bounce, but then we come back down, make this double bottom, or maybe a triple bottom like we spoke about.
Now it's even worse because you've just stopped. You've messed with people again.
Yeah,
it's better that we bottom soon. Like I would rather we get this bottoming process done sooner, so we can all 100%. Move on and just flush all the weak people out. Like a complacency bounce now would actually, I think, be more bearish longer term for Bitcoin than if we just swept the lows now and then we can reset and then, hopefully stocks go to new highs and Bitcoin pushes up.
Yeah.
And
you have to think about like the Max Payne scenario. So more thought behind the candlesticks, like Morin explained. Like, people will chase price up if it pumps from here, but admittedly, like the higher time frame picture gives a way better short setup when it moves up, as opposed to V reversing the new highs from here without running that liquidity lower. So, like I was saying with that 108.5 thing, people could chase up there and then lose sight of the bigger picture that the short on the high time frame is what we should be looking at up at those levels.
Yeah, like one of the reasons I've been very good at sort of catching these shorts is just using something as simple as like these daily 1225 EMAs. It's like when price, so taking the short from range highs, that's just one you're looking to close out into the mean. There's not these big swings because like again, when I short this, I'm not calling the top. I'm not saying it's over. When I'm shorting this, I'm not saying it's over. I don't know. I don't care. I'm just looking to take from my trade from the highs to the mid and I'm out. That's it, right? Why would I hold a short from the highs to here when in reality, most of the gain comes from like those first couple of days, but instead I'm sitting a month in a trade and it ends up at the same price. So that's, it's not illogical. But then we're looking at these EMAs, we cross bearish and what do we have? We have rejection from the bands. We have a push up, a swing fail, right? And this is something I cover is we look at the daily stochastic, it's oscillating at the highs. The daily stock, I only use this in ranging environments, sometimes in trending, but the context has to be shifted, right? Your indicators can't be used the same in a ranging environment than you do in a trending environment. That's important. But the fact that we pushed above the daily bands, took out these highs, failed to hold, which would have been the sign of strength if we held it. We got back below. And then for a couple of days straight, all we're doing is rejecting, right? So for me, that's how I got my conviction to hold it and to be patient. And it's like, even if you're playing alts, like you're better off waiting for these key trend reversals, right? Because price moves, from your accumulation to your trending to your distribution. So, as we're trading, your simple range, we could be pushing up, forming a distribution range. That's your top. And like the problem is you're going to be trying to chasing price all the way down here. While if you just put on some EMAs, you can see like, all right, hang on a minute. The momentum is to the downside. And I think Paradise touched this is like, you're taking all these attempts. And by the time you get this base forming and then those bands compressing and volume kicking back in on the tail end, you're already hurt so much that when that right opportunity comes where the probabilities are on your side, you're just going to have denial because you've taken so many scratches and burned through your account trying to fight the trend, right?
It's the biggest part for sure.
Can I throw a spanner in the works just to wrap this up? How much do you guys pay attention to macro? Because one thing that I think kind of leans into the camp of like maybe this bottoming process takes a little bit longer is like if you look at NDQ, like NASDAQ, and S&P, like it does look like it's due for a cool down. Now, obviously, this logic isn't foolproof because it can like do this and just keep going nuts, but it does look like it's starting to show signs that it wants to cool down. I mean, it's been one small candle. But if you go onto the daily, you can see that we got a test of the noodle for the first time since the tariff thing. And then if you look at the dollar as well, the dollar's actually breaking out. So it's had a reclaim on the daily, but also weekly as well. You're starting to get a bit of a flip. Of course, that could just be like deviation. We could just come back into this range and then the dollar goes down and stocks pump further. But this to me looks, and obviously a lot of this is off the back of the rate news, so it'll hinge on the December rate decision. But this looks like it does want to go higher, like maybe even into this zone here, which could lean towards stocks cooling off just a little bit more, maybe coming back down to this zone, which will obviously result in a bit more weakness for Bitcoin. How much do you guys look into this stuff when it comes to crypto as well? Because they are obviously, Bitcoin and equities are highly correlated. So I'm just wondering if you've looked at the dollar Nasdaq synergy right now.
I've been looking at the S&P chart, also crypto stocks, been following them to sort of give a lift. But the thing, crypto stocks have been pumping lately, and the broader market hasn't followed so much. So that was a bit of a risk-off sort of indicator in itself. But the S&P is just doing its thing. It's just grinding up the daily noodle like it's done time and time again. So it keeps forming all these high time frame divergences too that just don't ever play out. So
you would maybe get a little. This is the daily noodle. You can see it's just following. If it did break below, would you start to get a little bit? Would this be a risk-off signal on Bitcoin for you as well? That would likely correspond with 98K Bitcoin as well.
Yeah, I probably would, because the S&P is famous for doing the very sharp V reverse out, and then it just carries on like nothing's happened. So if it actually started to accept and go sideways, if it starts chopping here and just chopping through the noodle starts to flatten out, then I'd be more like, all right, this is actually starting to top out somewhat, and we're looking for that flush. But every time it has a deep flush into it, it just recovers quite quickly. So that just continues on. When it doesn't continue,
because there's
anymore,
so much passive flow, there's just so much money sidelined that isn't in equities that wants to be. Yeah, that's the problem.
So if we actually start to lose that with some conviction, then yeah, I would be concerned for the crypto market for sure.
I think gold will, without going into a gold segment, I think gold will take a little bit longer to reset now. I think that rotation is in full effect. So we'll see what happens with gold.
Check out gold with the H4 noodle. It's so clean to trade. Whole run up was retesting. Now it's just bearish retest the whole way.
That's pretty clean really for a macro asset. That's crazy.
Yeah, and look what happens when it lost it. Every flip, every retest was bearish. So
would you be shorting this now? It's pumping into the noodle, but
you do have higher lows. Yeah, that's the only thing I'm concerned about here. But it does have that pivot, which you've marked out. So get above the noodle, get above that. It can continue on, but I think it's a bit. Those higher lows are effectively relatively equal lows stacking up. So maybe we get a flush down, but it's kind of less.
Do you trade gold? Would you trade futures here? You can actually trade futures.
I trade PAX-G, so
Yeah.
Same thing effectively.
You wouldn't trade this? I mean, it could be a decent setup.
I've taken trades on it,
okay,
but I'm not shorting this right here. I actually haven't taken a short. I took longs on the way up, but I haven't taken a short because I'm only realizing now that the H4 noodle is being respected bearishly quite well. But like I said, those higher lows don't really give me much credits to take a short here. We'll have to see.
Yeah, it kind of looks like compression. We'll see. See what happens.
So for me, when it comes to macro, it's pretty much like my relationship with Paradise in the Discord. I don't fucking care. In reality, I do not care about macro because I have no edge with identifying macro. For me, trading is just a game of do you have edge? Do you have something you can repeatedly do? I cannot look at macro reports, interest rates, like I don't know even the terms, and be like, hey, this is going to be bullish on this asset for however long. When is this wrong? For me, it's I have these patterns that unfold repeatedly on price that I build playbooks with. Like one of the things I'm doing in the Discord is for the past month I've been doing a series every Wednesday where I build a playbook from scratch live, sharing the templates, how I build it, how to build the setup and the execution playbook. So for me, it's like, I don't need to care about macro because all I care about is, are we ranging? Are we trending? What system do I deploy when we're ranging? Why do I deploy my range extreme? When we sweep a high and we start trading to the bottom of the range, what do I look for? Mean reversions, right? Mean reversions. When we start trading to the lows, I'm looking for longs. So it's like, you're going to have that time where maybe there's that catalyst. But here's one thing I'll say. When we shorted 122.8 in the Discord, and then this macro catalyst came in, from, I think it was Trump. I don't remember what it was. But I took a setup in my system, in my playbook, that told me, hey, you should be looking for shorts right now. You shouldn't be chasing price. So irrelevant of what the macro was, maybe it went in my favor. But the fact is, I didn't chase price because of the news or because of what I thought was going to happen. I just followed my rules, followed my system. I took that setup, right? Did I know this was going to happen? No. So for me, it's like everything that I need is on the charts. But then there's the beauty of it, is like trading is so personalized. It's like, this could work for me. Someone else can make money using understanding macro, right? Understand the news. And it's like maybe you don't like ranging. Maybe you don't like taking a few trades. You want to take more, right? That's fine, because that's where you got Paradise's system. Maybe you don't like taking trades every day. You don't like scalping. You don't have time because you're working, you're studying, right? So it's like trading is very, very personalized. It's what works for you. What works for me might not work for you. Like, you need to figure out what best suits you, your personality, your lifestyle, and then you cater your trading to that, right? As opposed to trying to force a system or someone's teachings onto your own, right? You use it, you learn, but then it's like you're the one in the end who will know what's the right thing, what's the wrong thing to do.
Yeah, and it just depends how you build an edge. So you guys have different edges, but Fabian, literally, he's I won't share respect for the Discord members, but he just posted like a bunch of low caps. Like, he's now using these dislocations to like spot a bunch of like low cap plays which have been shattered that like really good fundamentally that could come back fast. I get an edge through it, in a variety of ways, but I'm similar in the sense that I lean on my network a lot to get an edge on information and smart people I'm connected with. So everyone has a different edge. Like, you might not have the network, but you might have much better risk management and understanding of like order flow and stuff that I don't have. So I think people just need to, and I think that's a good part about the Discord. Like, yeah, I'm not just trying to like blatantly shill here, but like genuinely, you do have like a bit from everyone. You benefit from my network and fundamental analysis. You benefit from Fabian's low cap and macro analysis. You benefit from Paradise's low time frame ability, trend trading. You benefit from Morin's higher time frame trade. So it's like, and you just pick which one you like and elements of all of it. But I'm gonna stop now because this is going on too long.
Yeah,
even though it's good.
That was a good one.
Thanks, Morin, for joining. We'll leave all the links in the description to all the stuff we've talked about today. And we'll see you guys in the next one. Let us know in the comments whether you want us to do this again with us three. Thanks, guys.
Sounds good. Cheers.
Thank you.